Hello everyone, this is Peter Vivas, and today we're going to break down the 2021 Knight Frank Wealth Report. And it's been a hell of a year, so they're going to look back at 2020 and see what happened with the ultra wealthy. So in this video, I'm going into the investing side of the wealth report and the key trends that are driving the investment landscape. And if you're wondering how the Knight Frank Foundation is able to determine this kind of information or receive this information, they pretty much go ahead and talk to the biggest banks, city private banks, all private banks, and financial advisors to get a better understanding of how the market is looking for these ultra high net worth individuals or high net worth individuals. What are they looking at? What are they being recommended? Where are they buying in real estate? So just to be clear, the attitude survey is based on responses from more than 600 private bankers, wealth advisors, and family offices representing combined wealth of more than $3.3 trillion. The survey was taken during October and November of 2020. Now, before we get into this, there are a few definitions that I think you ought to know, which are ultra high net worth individuals, high net worth individuals, and prime property. So simply put, ultra high net worth individuals are those who have assets, including their prime residential home, of $30 million or more. And high net worth individuals are those who have residential property or assets of $1 million or more. Now, prime property, that's a bit of a tricky one. That one goes into a per market basis. So for example, if you're in Miami and the total, market of real estate or prime property is $100 billion, it's the top 5% valued prime real estate home of the total market per market basis. So there's been a big appeal for real estate and the reason for this is because the Knight Frank Foundation says, and I agree, I've said this before, the volatile markets and lower bond yields pretty much make real estate one of the best places to park your money. And purchasing prime real estate, it's just a great place for your money to grow over a long period of time at a faster rate than bonds, and has less volatility, so less ups and downs than the stock market would. So there's a big diversification, a big influx of high net worth individuals investing in real estate. So look at this. In 2020, despite the COVID-19 pandemic, ultra high net worth individuals are still investing in commercial real estate during 2020. And the attitude survey, which is all of the individuals that were brought in by the Knight Frank Foundation, sent surveys. And these are hedge fund managers, private wealth managers, family offices. So that's what the attitude survey consists of. That a quarter of ultra high net worth individuals, remember that's people with 30 million net worth or more, plan to invest in commercial real estate in 2021. And the 5 drivers are safe havens, so large, relative, liquid, transparent markets with favorable legal systems should continue to attract global private capital. Europe remained a relative safe haven over 2020, and we forecast countries such as Germany and the UK to be key recipients of real estate investment in 2021. Elsewhere, locations such as South Korea, which benefited from double-digit stock market gains last year, where workplace mobility is back to pre-pandemic levels, saw an increase in real estate investments by private investors, and they expect to continue this year. Like I mentioned earlier, a quarter of the Knight Frank's attitude survey of ultra-high net worth individuals plan on investing in commercial real estate in 2021. And here are some of the sectors, as you can see in the graph up here. You see that private capital and real estate investments in 2020 split by sectors. $88.9 billion have been put into apartments. $59.2 billion have been put into offices. $27.7 billion have been put into retail, etc. Here are the top 10 countries for private capital real estate investments in 2020. So domestic investors in the US, 97%. So that's $142 billion have had private capital investments into the real estate space. So the U.S. is pretty big on that one. 142 billion. It's a very large number. And only 3% are cross-border investors, meaning they're coming from another area. And second, and tied with the UK, you have Germany, where it's at 67%, and it's $11 billion. And then you have the UK, $11 billion, 47% domestic investors, and 53% of outside money coming into the UK. That's a very interesting sign. Money is certainly flowing into the UK from other places, say maybe from Chinese investors, US investors, and as well as Germany, more so than cross-border investors coming into the US, which is interesting. A weaker dollar tends to get more investors coming into the US, but mostly it's been domestic investors reinvesting in the United States. China is similar to the US, where you have mostly domestic investors, people who live here or live in China, investing in China for private capital real estate investments. That's throughout all of 2020. So here we'll take a look at the prime cities that have benefited the most in 2020, and where prime real estate, and those prime real estate being the total market value. So the top 5% of the total market value of real estate in any given area. So let's go ahead and see. You see that $4 billion were invested, new money, people cross-border investing $4 billion of private investment in London in the 12 months to September 2020. So from September 2019 to September 2020, you see that there's $4 billion invested. And you also see that London has the prime stock, the number of homes considered prime in each city, so top 5% of the total market value in the world. So it has 68,189 prime stock or prime real estate. Dubai second, 42,000. Then we have Sydney, Hong Kong, and then Singapore. So here, let's get a definition of prime numbers. The definition of prime property varies by location, but it typically encompasses the top 5% of the market. The chart on the left shows prime stock level in 5 global cities where robust data is available. London has the most prime housing stock, while Dubai, home to 536 ultra-high net worth individuals, has the second highest availability of the 5 cities shown. Singapore, which is facing supply constraints, as Kate Allen discusses on page 40, has the lowest level of options for ultra-high net worth individual home purchases. So these areas have the prime stock. So let's go ahead and keep going. And then 7,743 ultra-high net worth individuals live in New York, or call New York their home, which actually is by far the most accumulation of ultra-high net worth individuals in the world. It's all in New York. And it hasn't changed since 2020. So anybody who says the cities are dead or New York is dead hasn't necessarily been so honest or hasn't seen this data. So here's a wonderful chart of the urban leaders. You have London being number one with wealth as far as coming in. So remember, we saw $4 billion from cross-border investments into London. And also the wealth, the investments over here, but then also the wealth accumulation. They have the most high net worth individuals in the world. New York has also the highest ultra high net worth individuals in the world. But it hasn't so New York and London are pretty much tied with wealth. But as far as investments, London takes the cake for cross-border investments. Most of the investments in New York have been domestic. And as far as lifestyle, New York is in a third place, but London is taking first place for lifestyle. And we have Paris. Paris is second place for lifestyle. No, it looks like Tokyo. Is that Paris or Tokyo? Oh, no, that's Paris with lifestyle. And it also hasn't received as much investment. I don't see Miami here, which is upsetting. But Washington, D.C. is pretty low. Looks like around the 5th for wealth. But and also looks like the 9th for investments. And then the 12th for lifestyle. Paris, like I said, mentioned earlier, is the third for wealth, and the third as well for investments, and then the second for lifestyle. Los Angeles is coming in at also in third place with is in third place for wealth, and it comes down here to investments to looks like that is the 10th place, and then lifestyle goes up. It looks like that is in the 5th place, which isn't surprising. They have great weather out there. So let's keep going. Let's take a look at this. Here's the health, wealth, and innovation. Typically you want to have ultra high net worth individuals living in your cities because they are the most free spending inhabitants. So increases your overall well-being as a city. And so in a bid to identify the future front runners in this race, they've merged two factors that measure high net worth individual wealth to create the new city trifecta, which is investments, lifestyle, and well-being in a sense. So focus on health, wealth, and innovation pretty much is the trifecta. And this is what the Knight Frank report is saying, that Munich is number one for the trifecta of health, wealth, and innovation. Second is Tokyo, then Paris, then Paris and New York are tied, actually. Boston, Toronto, London, Zurich, Hong Kong, you can read all that. It's right there. Los Angeles is the last one. It's tied with Seoul. So that's looks like Los Angeles isn't innovating as much. It's probably because everybody has left. A lot of people have left. One of the things that I found really interesting about this aspect of the wealth report, the cities to lead the way, is the fact that cities aren't dead, and they tend to go through periods of ups and downs. You know, in the 1960s, New York was bankrupt and it was considered dead, like nobody, and it was a very seedy place to live. And now New York holds the most amount of ultra high net worth individuals in the world. It's 7,700 something and some change. So, you know, because there was a time during the pandemic that there was boarded up windows, nobody was going out, there were, you know, cities were reminiscent of ghost towns. There was a belief that say cities are dead, you know, but more than 80%, it says right here, of global GDP is generated in cities. So it's really, you know, I don't see cities being dead anytime soon. It looks like New York is going to keep on thriving, especially because we've had such a fast recovery. It's not to say that places like Miami's a city, it's a great city. It's going to bloom. I think Miami's still going to be able to bloom. I'm very bullish on Miami, but New York and London are going to continue to do well. You know, people saying they're moving to suburbs and areas like that. Yeah, it's true. More high net worth individuals and people just sort of focusing on space, access to open spaces, but you still need the cities in order to grow. And there's a lot of push for, you know, developments in commercial real estate, both in London and New York. So now getting into the real estate side of the ultra high net worth individuals and high net worth individuals. Said that word so much. We see the Piri 100, which stands for Prime International Residential Index, and this is held by the Knight Frank Foundation. So we're going to look at the key drivers that pretty much move the markets. So one of the biggest ones was space. They call this chart the Space Hunters. How ultra high net worth individuals' interest in property types has changed as a result of COVID-19. So city or urban area, 20% more, and then there's a 33% less. And then there's 47% had no change to city or urban areas. So 47%, just a little less than half, didn't choose to move from urban or cities. Only 33% said that they didn't want. So resort, coastal area, 56% more. So these are people with net worths of $30 million or more, $30 million or more. 56% were looking for resort coastal areas, and 34% didn't have a change. Only 11% said that they didn't want that. Like, who doesn't want that? But all right. Rural location, so that's like the suburbs, more wine country, a lot more space. So 47% increase and then 38% not changed. And then ski destinations doesn't seem to be that much of a interest. So resort coastal area, say Miami is a resort coastal area, South Beach, and rural locations, think Napa Valley in California. These have increased substantially. This is all from the Attitudes Report. So the key findings said that Auckland leads the index with prime price growth of 18%. Some Chinese mainland cities saw sales and prices recover rapidly. Demand was domestic in nature due to travel restrictions. That makes sense. However, money did not stop flowing into London. Remember that, $4 billion, $4.2 billion. And then mountain, rural, and waterfront living were in demand. Interesting. And mercurial visa and tax regimes are driving decisions. All right, so this is the Piri 100 index held by Knight Frank Foundation. And remember, the Piri 100 index, it tracks the movement in luxury prices across the world for prime real estate. And Auckland, New Zealand, had the largest increase of 17.5%, almost 18% growth in price movement because of demand. Typically, prices increase in real estate because of demand. This is something we all learned in economics. Shenzhen in China, 13.3%. And we have Seoul, Manila, Moscow. Interesting, Moscow. I did not expect that for prime real estate. St. Petersburg. San Francisco had a 6.8% growth. Los Angeles. Let's see if they have Miami up here. Miami, there you go. 6.1% growth in prime residential real estate. Hey, that's a good sign. I like that a lot. So let's see Germany. Where's Germany at? Frankfurt, there you go, 3.8%. Well, the biggest decrease has been Buenos Aires, negative 12%. And Cape Town down 9.2%. Bangkok, 7.3%. Dubai, negative 5.9%. And New York, 5.1% for prime residential real estate. So it's on sale right now with everything that we've just discussed about cities not being dead and 80% of GDP being created in cities, and New York having 7,700 ultra-high net worth individuals. Prime residential real estate is down negative 5%. That's huge. That's huge. London as well, down 4.3%. These things are on sale. Wow. So if you want to park your money somewhere in the millions, then these are the places to go to. We have Delhi, was not too much of a decrease, 0.1%. And so that's it. I'll definitely link this in the description. So here's some local insights from the Knight Frank network. Urban living remains aspirational in Asia. If you live in a major metropolis such as Tokyo, Shanghai, or Hong Kong and you want more space, you buy a bigger apartment. You don't move back to the countryside. This is Justin Ang, Knight Frank Asia Pacific. Over here, another local insight. Prime European second homes performed strongly in 2020 with Provence, the wider Côte d'Azur, I'm saying that horribly, northern Tuscany, and Lake Geneva seeing heightened activity. This is Mike Harvey, Knight Frank International. And then we'll have, let's go to the New York local insight. 2020 was a tale of two cities for New York. While suburbia was in the spotlight in the second and third quarters, activity picked up by the end of the year, especially in Brooklyn and Manhattan. Overseas investors are eyeing New York because greater negotiability means value and rental demand is recovering. Stephen James, Douglas Elliman, New York. This right here is one of my favorite charts. This is basically the relative values that you can buy for $1 million. So the number of square meters, it says right here, of prime property in US dollars of $1 million that allows, like what $1 million pretty much gets you in prime selected cities. So in Monaco, you get 15 square meters. So let's see what 15 square meters, meter squared is in square feet. What is 15 square meters in square feet?
161.46 square feet.
So 15 square meters is 161 square feet. That's tiny. So for $1 million, in Monaco, you can only buy 161 square feet. That's like a closet. That's a very tiny closet. It's like a service bathroom. So in Hong Kong, you can get 23 square meters, London, 31 square meters. Let's see what that is. That's double. So it's around 260. Yeah, so you can get almost around 300 square feet in London for $1 million. Around the same for New York. Let's see. So what's 34 square meters in square feet?
The answer is 365.97 square feet.
So 365 square feet is what you can get for $1 million, roughly, in New York. So let's see Miami. 85. See, look at the value that you get in Miami. And you have wonderful location, beach views. So let's see. What is 85 square meters in square feet?
That would be 914.93 square feet.
So you can get 914 square feet in Miami for $1 million. Now, this is for prime real estate, granted, right? Like this is for the number of square meters of prime properties in for 1 million what prime property US $1 million buys in selected cities. So this is like beachfront access, like looking at nice areas, great locations, safety, and everything. You get 914 square feet for $1 million of prime real estate, as opposed to in Monaco or New York. Like New York, you're only getting 300 square feet. Like that's nothing. You can't live in that. At least with 914 square feet, that's a decent studio with a great view. Now let's look at Sao Paulo. Sao Paulo for $1 million, you can get 252 square meters for $1 million of prime real estate. So what is 252 square meters in square feet?
2,712.51
Wow.
square feet.
So you can get 2,712 square feet for $1 million in Sao Paulo, Brazil, of prime real estate. It's a good opportunity there if you're looking for places to park your money. Now, there are political things and other aspects you should take into account, but hey, you can get a nice view. In Dubai, 165 square meters. What is 165 square meters in square feet?
It's 1,776.05 square feet.
Decent, but you're living in Dubai. I mean, it's nice, but hey, you're living in Dubai. Now let's look at Los Angeles. So last but not least, how many square meters is, oh, that's not the way to say it. 44 square meters in square feet.
The answer is 473.61 square feet.
473 square feet is what $1 million will get you in Los Angeles. So I like Miami. Miami's the best place to live. Dollar for value, especially if you're talking about prime real estate with $1 million can get you. That's fantastic. So let's keep on going. You can find better deals than that, like, you know, for sure. More than 900 square feet. So now let's go ahead and look at the prime prospects. So these are prime residential prices, annual percentage change forecast for 2021. Now I want to start with Miami because it's where I live and I love Miami. So Miami is right here. And so 2020, the forecast for 2020 was 5%. The actual was 6% annual change for prime real estate, granted. And then for 2021, you know, we'll see the forecast is 4% growth. So it seems to be slowing for prime real estate for Miami. Now let's go to New York. New York said in 2020 had a negative 3% growth, and actual had a negative 5%. That was the forecast. The forecast was negative 5%. And we have yet to see any real recovery here in 2021, and the forecast is still 0%. So there's no forecast here for these. But let's see. The best one is Seoul. Seoul, which is in South Korea, population of 10 million people. So Seoul in South Korea, in the forecast is for 2020 was 2%, and forecast for 2021 is 7% growth. The actual growth for 2021 is 12%. So what is Knight Frank going to be watching? What we'll be watching in 2021, we'll also be watching it too. Travel recovery, the speed in which commercial air travel resumes and Airbnb model recovers. Wow, Airbnb, they mentioned Airbnb. Renters return. How soon overseas students and corporate tenants return to gateway cities? Yeah, that was definitely halted during the pandemic. Close to home, whether the ultra-high net worth individuals focus on second homes with better connections to their primary residence. Push and pull, the rollout and rollback of golden and welcome visas and citizenships by investment schemes. Projects take a hit. The impact of COVID-19 on the scale of future infrastructure projects like Paris Olympics and China's Belt and Road Initiative. So that's something to look out for. And the need for speed, the extent to which second home buyers prioritize destination with fast broadband for home working. Yeah, that's another thing. If you're moving to rural areas, you're going to need fast internet. And those typically don't have the internet cell towers that are required to basically support high frequency internet. So that's some interesting outlook here. I'll pull up the chart one more time. 26% of high net worth individuals are planning to buy a new home in 2021. So, hey, real estate agents, keep that in mind. According to respondents of the Attitude Survey, they don't seem to be wrong. This Knight Frank Foundation is really good. So 26% of ultra high net worth individuals. That's people with $30 million or more. Dora Puig must be, that's why she's probably selling so much. And she has a great reputation. So this is the chart. I'm going to pull it up a little more. That's the chart right there. If you want to look at that, maybe screenshot it. Really great. I also linked the link to the wealth report. So check that out. It's pretty interesting. 26%. Man. So now let's look at what the Knight Frank Foundation thinks are the next neighborhoods, right? So the next neighborhoods. It says right here, they're pulling up Gangnam, Seoul, South Korea. Why is it primed for growth? Let's find out. There's a high concentration of wealth in the area. Apartment prices have risen by 86% in the past 18 years. Wow. That's a lot. Large-scale redevelopment projects are currently underway, and schools are famous for getting students into Seoul National University and other top universities. Favorite bits, not only is Gangnam considered to be South Korea on steroids, it's also home to Asia's largest underground mall, Starfield COEX Mall. The mall houses or is connected to many luxury brand stores, casinos, duty-free shops, 5-star hotels, and department stores. And what will my money buy me? Exclusive membership into an elite inner circle that oozes affluence and exclusivity. Prices at a new high-end Gangnam membership residence. Gallery 832 range from 2.8 million to 4.6 million. Most units are similar in size, but the price varies depending on the view. Let's see if they have any pictures. No, but looks lovely. Look like a lovely area. One things locals like to keep secret. From hot clubs, bars, and eateries, 19 of Seoul's 33 Michelin-starred restaurants are here to plastic surgery clinics and supercar dealerships. Gangnam is the playground. The playground for many super rich South Koreans and their jet-setting friends. The best-kept local secret is the universal truth. When Gangnam, do as the Gangnam's folks do. When in Gangnam, do as the Gangnam folks do. All right. Sounds like a great plan when I go visit. Notting Hill, London. 16 incredible communal gardens. Okay, favorite hub spots. Okay, they see Notting Hill, London, France, Uzis, France, province, France. What else? Bray County, Wicklow, Ireland. Okay. Riverside, Vienna, Austria, huh? North America, we have Nomad, New York. As the name implies, Nomad or North American. North of Madison Square Park is anchored by some 6.2 acres of beautifully landscaped green space spanning several blocks. So this is the new Riverside, Vienna. Oh, this is Vienna. Oh, no, this is Madison Square Park Tower, Nomad, New York. So this is the view that you get in New York. Wow, it's the Empire State. Nice. Beautiful. Will my money buy me? You can get a foothold in Nomad for as little as $345,000 for a studio in a co-op with one-bedroom apartments ranging from $600,000 to $2.5 million and two beds from $1.3 million to $8 million. Higher-end condo penthouse sell for $3,000 per square foot, ranging anywhere from $14 million to $20. This is very expensive. It's just where the big money's going. Let's see what else. Laguna Beach, California. Barbados. Okay. according to the Knight Frank Foundation, is a weaker dollar. So we have seen the dollar go down in the last year because of inflation concerns and also the supply of the amount of money that we have has brought emerging markets back into focus. And some of the emerging markets include India, it includes China, which is not necessarily a 100% emerging market because I think they're right on par with the US on paper. Markets, India, Indonesia, and China are like the top three right now that investors are looking at. Look at the global wealth distribution. And throughout 2020, it's been an erratic year, but ultra high net worth individuals saw an increase in their population of 2.5%. But it wasn't spread across evenly, as this chart shows. It's actually more centered in North America. You also see that it was centered in Europe. And you can also see that there was a lot of wealth created in Asia. Asia actually had a 12% increase in ultra high net worth individual population from 2019 to 2020. So the one with the biggest decline, and this is because of the conversion rate from dollars, because the US dollar is the global reserve currency. It's the dominant currency, and that's what people measure investments against. It's the benchmark. So Russia had a negative 21% decline in ultra high net worth individuals, and so did Latin America. Latin America had a negative 14% decline, and that includes Argentina, Brazil, all these other countries in Latin America. But interestingly enough, 5% growth in Africa. Australia had a 10% growth, so they're on par with Asia. So Asia and Australia did very well in managing the COVID-19 pandemic. North America, like I said, had a 14% and a 1% increase in Europe. So let's take a look at the levels of prosperity. See if you all can look at that. So levels of prosperity right here. So you see the proportion of world's millionaires and billionaires by regions in 2020. So millionaires, there's 42% of the world's millionaires live in North America. And 29% are in Europe. Asia has 22%. Latin America has 2%. Middle East 2%. Australasia 1%. Russia 1%. But the billionaires, that's where it really gets interesting. Asia takes the cake. 36% of the world's billionaires live in Asia, and only 31% are in North America. Asia had an explosive growth in wealth amongst its economy and private sector. So that's something to keep an eye out, and that's why so many banks are paying attention to Asia and emerging, and China specifically as an emerging market. The Middle East has 6% of billionaires, and Russia has 4% of billionaires. And Latin America has 3%. Let's go Latinos. So the top 10 risers, so the countries that saw the biggest increase in their ultra-high net worth individual population. So you see the biggest one was China, 16% increase in ultra-high net worth individuals. So, and then we go to Sweden, Singapore, Saudi Arabia, Switzerland, Japan, Canada, South Korea, and the US had a 4% increase. And, this doesn't take into account the big wealth disparity amongst the wealthy and the not so wealthy. And there's a huge, huge divide now because the ultra high net worth individual class has done spectacularly well relative to the lower part of the economy, the not so wealthy part, people like you and I, the normies. So the top 10 fallers, let's look at that. The ones that decreased in wealth the most for the biggest decline in ultra high net worth individuals was Greece at 33%. Not surprising after what they've been going through, a lot of financial troubles, and mainly their sector is tourism. United Arab Emirates, also a big focus on tourism, negative 22%. Turkey, negative 20%. Spain had a huge, huge decline, negative 14%. Brazil as well. You're probably wondering, like, what keeps these ultra high net worth individuals up at night? What is it that's worrying them? What are the potential influences on wealth creation and wealth preservation? And the Wealth Report does a great job at finding out those answers directly from the source, the financial advisors to these family offices, and even some of these high net worth individuals. So let's go ahead and explore that real quick. So these are the biggest worries to the high net worth individuals. So ongoing disruption by COVID-19, 90% basically alluded to the fact that they're concerned about ongoing disruption of COVID-19. 80%. And a second one was domestic government policy. So that's an interesting one. And then tax issues are 42%. So domestic government policies and tax issues tend to be the second and third biggest worries for wealth preservation and wealth creation. And, with good reason. We have Biden, who's increasing a wealth tax. We already saw Argentina put a one-time 2.5% wealth tax on those who have assets of $2 million or more, $2.5 million or more, to help the government continue spending on the things it needs to spend money on, like unemployment and all the other programs that's already had laid out, defense and all this other stuff. So tax issues are a big concern for wealth accumulation and also preservation. Wealth transfer to the next generation, that's a big concern. So for those who are wealthy and have children, and the wealthy ones are kind of out the door soon, their successors, that's a big concern for the wealthy ones who are out the door, because they don't know what they're going to spend their money on. Big thing that is happening, and it hasn't become super profitable yet, but it's socially good, is the ESG, environmental, social, and government aspects, which is making buildings greener, LEED friendly. And so these are some aspects that are concerning. And this is all, just to be clear, a worldwide survey for the ultra high net worth individuals, for the world of ultra high net worth individuals. And that is a real interesting aspect. And this is just for the 2021 outlook. So then here are some of the opportunities that the ultra high net worth individuals see in 2021 and they're excited about. New investment opportunities in a post-pandemic world. So that could be anywhere around pharmaceuticals and technologies that connect people touchlessly, like Zoom or something like that. I'm not recommending that, and they're not saying this, but it's just the new opportunities that are out there. Another one is the technological disruption as an opportunity. Say teledoc, being able to go to the doctor without actually having to visit and do a checkup or anything like that. So you can just pull out your phone, just general questions, not if you're like really sick. That's a big one. That's a disruptor in the space. The financial industry has a lot of technological disruptions coming out. Goldman Sachs and JP Morgan Chase are very well poised to take the lead on that, whether it's with crypto or it's with transactions or making it easier. Improving geopolitics for 2021. Looks like, because Biden has taken a softer stance with other countries than President Trump did. The wealth transfer to the next generation. See, aside from it being a concern, a 28% worry to ultra high net worth individuals, it's also one of the things that they see as an opportunity for the wealth transfer to the next generation. New things can be very profitable and can also increase wealth if done in a way that is correctly, and it also helps better the lives of many people. Usually you can get what you want if you help enough people get what they want. And, I think all of us really want a cleaner, more purified air, a lovelier sky to look at, and less carbon emissions, and just ways to save money on gas. I mean, electric cars have been huge in the past year, and the 2020 pandemic has only accelerated these trends. 22% also see opportunities arising with the ESG agenda. Like I mentioned earlier, the environmental, social, and government agenda for all of the countries. Spain and the US are leading that specifically. Spain has, for example, blocked out streets to basically remove the amount of driving within certain neighborhoods, and that has actually lowered carbon emissions substantially, and they're planning by 2050 to lower the carbon emissions by half. It's huge. Tax issues are also opportunity. 18% think that tax issues, and then also Brexit, 6% for opportunities for wealth. Other things to look out for are privacy. Government's desire for transparency will clash with individuals' right to privacy. So at least in the European Union, privacy and data protection are fundamental rights. So companies like Facebook are having challenges making their returns when they make money off of people's data. So there could be a lot of tension there. Equity bubbles. We've seen a huge uptick in equity bubbles, and after a big dip that we had in the early 2020 pandemic, and so that's a risk that some see that we could be in an inflated bubble type of situation, according to ultra high net worth individuals. Another thing that to keep in mind for investment opportunities, just you like to follow smart money. Demographic factors and infrastructure development with a continent will create even greater opportunity. And this is Africa. Africa in specific has a lot to offer as an emerging market. And then Asia, of course, new trade deal, a widening investment landscape and burgeoning middle class make it impossible to ignore the region's potential wealth creation and growth. So Asia could have a lot of opportunity for bigger gains. And I also see India as a better alternative. And so both aspects are definitely, India has a more to go. Asia is a little bit more developed. So typically throughout history, you see when the stock market goes down and there isn't a lot of employment, people get very entrepreneurial. And that is definitely the case that we've seen in 2020. Here's a graph of the entrepreneurial spirit, the number of new companies registered in the first 3 quarters of the year. In 2020, there's 1.1 million new companies that were registered. So the lighter one is 2020, the middle one is 2019, and the darker one is 2018. So you see 566,000 in the UK as opposed to 498,000 in 2019. So in 2020, a lot of people are building new companies and are excited about the future and have found new solutions because they have a lot of time to think or something. Even myself, I started this investment news podcast. Not to say I'm at this level, but I can definitely see the appeal. So right here, we're seeing the 5-year growth forecast for the ultra wealthy, ultra high net worth individuals and the hubs expected to grow in the next 5 years. So we see that there's an expected growth in Zambia and South Africa, 40% and 32% respectively, and Indonesia and Asia having 67 and 63% forecasted growth. The U.S., since it's already so large, 24% and 23%. That's why there's been a huge push towards emerging markets in the past year, because the kinds of returns that ultra high net worth individuals and even investors like us, because we can follow these ultra high net worth individuals and see what they're doing and just follow the smart money, because if they're investing billions of dollars into areas or locations, then why not invest your hundreds of thousands of dollars that you have or millions of dollars that you have and follow their lead? So right now it's looking like Poland, Sweden, Indonesia, India, Zambia, South Africa, and even New Zealand. These are some top places that are expected to grow. So we have great expectations coming from the attitude survey. Like I mentioned earlier, these are the financial advisors of the ultra wealthy, ultra high net worth individuals, the private banks, and even some high net worth individuals who respond to this survey. The Knight Frank Foundation has been around for more than 150 years, and so they've been able to establish many connections throughout the decades. So there's great expectations, huge optimism. So respondents who said that their clients' total wealth would increase in 2021 significantly, which is significantly being more than 10%. 22 of the respondents said that their clients or ultra high net worth individuals' investments and net worth would increase by more than 10%. 22%. Marginally, so it's less than 10%, more than zero. Between 0 and 10%, 49%, more than half of the respondents said that their clients' wealth would increase marginally. in 2021. 22% said they'll remain the same. Same isn't bad. 22% agreed on that. And only 7% said that they'll decrease marginally, so less than 10%. And 1% said that they'll decrease significantly, which is greater than 10%. So very optimistic for 2021 for the ultra high net worth individuals, and if we follow the smart money, we can get a little more wealthy too. And, seeing that trend where money flows, they have the smartest people on their teams typically to find out what are the areas of investing, what categories are worth investing in. And we'll get into the specific asset classes and investments that these ultra high net worths are getting into in the future. So there's also a projected 27% growth in the population of ultra high net worth individuals, those with assets of $30 million or more. So which would bring the total ultra high net worth individual population in 2025 to 663,483. So if we do a quick calculation, 663. So right now there's a population of 484,000 roughly ultra high net worth individuals in the world. So last but not least, we're going to look at the passions that these high net worth individuals are collecting. And you're going to see, you're going to be very surprised by some of these things. So a mixed bag. So handbags are huge. Just look at the chart. I like the charts. Beautiful chart. So we have handbags right here, 17%. So objects of desire, 108%. What is this? Oh, so the inner ring is 12 months and the outer ring is 10 years. So this is the growth rate. So in the past 12 months, 17% increase in handbags. Fine luxury investments, objects of desire, and 108% in the past 10 years. Wine, a 13% increase in the past 12 months, and 127% increase in the past 10 years. Cars, 6% increase, and 193% increase in the past 10 years. Watches, 5% increase, and only an 89% growth over the past 10 years. So it could be an opportunity. Furniture, don't know why. Well, there is some nice furniture out there. 4% in the past 12 months, and 22% in the past 10 years. Let's see, what else? Jewelry. I was actually going to talk to Julia Benetton about the colored diamond space, but I wasn't able to get to her. In the past 10 years, the colored diamond space has increased 39%, but it decreased 1% in the past 12 months. That's unfortunate. Coins decreased 1%, and increased 72% in the past 10 years. So it's really still looking pretty good. Could be an opportunity. Jewelry decreased 1%, but in the past 10 years, it's been 67%. Rare whiskey decreased 4%, but in the past 10 years, it's been 478% growth. So it seems like it's oversaturated. It might be a bubble that's ready to pop. Art. I would say art is down because, let's see, last 12 months is 11% and 71% growth in the past 10 years. I'd say it's down because auctions had to be held off during the pandemic. So that might be a reason. That's interesting. So what are the sources here? Compiled Knight Frank research using data from the art market research, art coin, furniture. Yeah, so they got their sources. Nice. And let's see what else is going on here. Francis Bacon, 1981 triptych inspired by the Oresteia of Aeschylus. Fetched $84.6 million with Sotheby's, New York in June, making it the most valuable work of art to be auctioned. That's fascinating. It's quite an interesting piece, isn't it? Huh. Yeah. How would you say this?
By the Oresteia of Aeschylus. Triptych inspired by the Oresteia of Aeschylus.
Aeschylus. Nice. Wow. 14.83 carat spirit of the rose, the largest vivid purple pink diamond to appear at auction, sold for $26.6 million. Somebody sold a T-Rex skeleton. That's absolutely absurd. For $31.8 million. My gosh. What's this? Femme du Beau. attracted a bid of $12 million and sold for 13.7. It's an old car. 1932 Bugatti sold for 7.1 million. That's fascinating. Imperial Green Jadite. How do you say that?
Jadeite.
J-Dot. $10.4 million. Rolex Daytona. This is Paul Newman, sold for $5.5 million in New York. These vases. Oh, I heard that someone found a vase at a yard sale for like $35, and they're able to sell it for $500,000. Absolute killer find. William Shakespeare, 1623 Comedies, Histories and Tragedies, often referred to as the First Folio, was sold by Christie's New York in October for $10 million. That's incredible. That's a piece of history right there. And Hermes Crocodile Retorn Kelly 25 broke the record for a handbag sold at auction when it was sold by Christie's for $437,000 for a handbag, man. Sotheby's sold autographed 1985 Michael Jordan game-worn Air Jordans for a record of $560,000. This Japanese whiskey sold for $6.2 million. Nice. Pretty incredible stuff. So now you see where money's going. Keep that in mind. So just to be clear, the Attitude Survey is based on responses from more than 600 private bankers, wealth advisors, and family offices representing combined wealth of more than $3.3 trillion. The survey was taken during October and November of 2020 for selected country-level data. So you can email them to see if you want selected country-level data. Might do that for the U.S., but then we have all the data here. One of the things that I wanted to share with you all was this. On average, what percentage of clients derive the majority of their wealth from the following sources? So it says here, the regional average, 49% own their own businesses. Keep that in mind. 49% own their own businesses. That's where they generate most of their wealth. And then 21% was their investment portfolio. So that's says a lot. So own your own business, get a long-term, and salaried employment was very low, 10%. Not super low, but 10%. But let's see how it was in North America. Yeah, North America is still the most for owning your own business. 31% for investment portfolios. That's pretty high. 13% for 18% for salaried employee, and then a mix was 13%. I just want to share that with you all. Pretty interesting stuff. For those of you wondering, how many high net worth individuals are there out there? You know, high net worth individuals with basically assets of 1 million plus. So in the world in 2020, there's 48,505,781. Expected to grow to 68 million by 2025. In North America alone, there are 20 million high net worth individuals, those who have assets worth $1 million or more. And so let's look at the ultra high net worth individuals. For those of you wondering, how many are there? How many people are out there that have $30 million or more in assets, including their prime property? So worldwide in 2020, 521,000. Only 521,000 people have $30 million or more in assets. In the U.S., that is, or North America, that is 190,000. So vast majority of them live here in the U.S. And many of them do live in Asia, though. Asia has another one. Asia's pretty much competing. Most of them live here in North America. North America doesn't necessarily mean the U.S. Let's see specifically the U.S. Oh, let's just go real quick. Right here in 2025, that number is expected to increase to 663,483. So from 521,000 to 663,000, a 27% increase, as opposed to a 41% increase for those of high net worth individuals, not ultra high net worth. So let's go to the United States here. The U.S., 19 million high net worth individuals in 2020. And 180,000 in the U.S. Yeah, so it's a lot in the U.S. Let's see Asia or China. Let's see China specifically. Chinese mainland, 70,000 for ultra high net worth individuals. There's probably Hong Kong, 5,000. It's a lot. The U.S. is expected to increase 24% for ultra high net worth individuals and 33% for high net worth individuals. So for those of you who didn't know, now you know. And it's not a lot of them out there, you got to say. But wherever they're putting their money typically makes things around it grow. And they have a lot of smart people looking at what they're investing in. So keep that in mind. I like to follow the smart money. Have dumb money characteristics, with sometimes we get to outsmart the smart money being dumb. But most often for longer term investments, wealth preservation, if you want to keep your money intact, usually following these kind of tactics are really good. The commercial real estate side surprised me that more than 36% of family offices are looking to invest in commercial real estate. So it's probably because it's buying the dip, just like how dummy investors buy the dip for GameStop or Rocket Mortgage. So we'll take a look at that. I hope you enjoyed the video. Please like the video. Helps the YouTube algorithm. If you like more videos like this, I'll be happy to do more things on the Knight Frank Foundation or studies, researching the wealth reports and other data sets that I find interesting. If you do like it, share with a friend, subscribe. All right, bye.